Good morning, guys. Welcome to this first day of July, Tuesday, July 1st, 2025. And we officially have, what, 6 months to Christmas? Sorry, I had to bring it up. We still have July 4th ahead of us, but Christmas is getting pretty freaking close. You had to start thinking about it. So we're starting off the third quarter so far. Yesterday started, it wrapped up today with a pretty nice little rally. Not the crazy one. The kind of mostly a holding day, had a little pop towards the end of the day there, but definitely a strong close at new highs. We'll see what the third quarter bit brings. Usually, traditionally, you have July, August being pretty weak, and then when they have a bit of weakness. Right now, we got a few things going for us. We got that tax bill coming through, fighting it out now. If that passes, or well, I should say when it passes, I think the market's going to get a nice little, um, at least be able to hold the trajectory to the upside. If it doesn't pass this, I think you see a sell-off because I think a good chunk of that is probably priced in the market already. That's the caveat. I think there's a fair amount of that is priced in already, expected to happen. If it doesn't, yeah, we'll see some weakness. Also, we have um, it had something right on top of my head. The Middle East situation that's holding up so far, and that's also going to be a potential uh, a yeah. Let's just say it as long as it holds. I think my market is just going to keep pricing it in that everything is good. And the final thing in the trade deals is so start seeing some of those come through. That's going to be a good tailwind for the markets. So we've got some things going on there. So we can keep us going higher through the July, August. We'll find out if it works. But July 1st, we have, as I said yesterday, kind of an odd trading schedule Thursday, Friday. Friday's a half a day, July 4th. Then we had July 3rd, it's going to be a half day too, just for equity. So equities close early on Thursday, but we have a ton of news coming out that day as well. So that's going to be an interesting day. Right now, for today's trading, we have news-wise, we got Powell speaking at 9:30, PMI manufacturing at 9:45. At 10 o'clock, you get ISM manufacturing, construction spending, and job openings. So 9:45 and 10 is where we have, or actually 9:30, 9:45, and 10 is where we have the bulk of the stuff coming out. So pay attention to that. But we are at the highs. We are right here. We made new highs. We're extending in price discovery territory. Still in the move out of the middle. Yesterday extended again to the upside. So we are still in the move out of the middle to the upside, and we should trade it as such. In other words, not going to be aggressive on the short side. I'm going to favor the long side and look to buy weakness for rotations back up. And then when they're ready to cut off the buying, we'll know. And then we can start looking for a spot to cut off the selling. And then step three, getting back into stage three, which which is basically finding value again. So stage one, we are still extending to the upside. Stage two, backing off, finding a spot to cut off the selling. And stage three, starting to build value again, and finding a spot, a balance point, and then waiting for the next piece of news which is going to take us higher or lower. So that's how we get started. Trading this one alongside of the market. Looking to buy weakness at this point against the 62.35s, the 25s, 23 to 25s, 62.10s for rotations back up. So below the 62.25s, I'll give it one more level down at this point. Since I didn't extend any overnight, I'll give it one more level to the downside just for before I take off the range bound trading dynamic. So I'm going to buy weakness at the 35s, 62.22 to 25s, 62.10s for rotations back up. Still looking to buy again 6200, 50, 6190, 6180. But at that point, I shifted bias back to a more range-bound trading. And so if it backs off more than that 62.10 in the as early weakness, I'm going to be back range-bound. Still looking to buy against 6200, 6190 down to the 6180 this rotation. Now, if that rotation comes out the 6180s, I think we may have a problem. So we'll see if July 1st is going to start off with some selling, profit taking, or if it's going to be more continuation. A short week like this, light volume, you never know. It doesn't need much for it to keep going higher. Um, it just depends a little bit of what the sentiment is. So starting off the quarter dynamic, we'll see if there's anything there in terms of profit taking. But we can see them retrace this a little bit. You see this move out of the middle. So down here at the 6200s, a nice little volume edge, and lower end of that is 6180. So this is range right there is the one I'm talking about. They start to trade below that one. I think we have a bigger problem, and then at that point that we may just head back down to that 6140s, maybe even lower. So we'll see. They've been slowly grinding this to the upside, and we're going to start off the same way and then see if they can keep it going. They're looking to buy early weakness, 62.35s, 22 to 25s, and the 62.10s. Below 62.10, take off the long buys, go back range bound, still look to buy weakness down to that 61.80s. And below that one, yeah, that's when we had to really start worry about the short side of the market. On the way up, looking for short setups against the 62.50s, 62.55s, 62.65s with a lot of caution. So these could certainly hold, but as I said, on the way up, not going to be very aggressive on them. We're going to look for short setups against them, but not very aggressively. So that's kind of the dynamic, and that's just because we're still in the move out of the middle to the upside, extending to the upside. And I think the July 1st, the third quarter dynamics, if that changes anything, if we had a little rally going into the end of the second quarter, you could certainly see some profit taken today. We just have to wait and see how that shakes out. But there's no reason to look at it any way else than from the long side of the market, at least to get started. Looking at the bonds and the NASDAQ. So bond market, if that's the NASDAQ, I want that guy. Bond capital flow. We are trading higher on the bonds, so I think good yields coming down, and bond prices coming up. Let me see, where's my that's my F1 on the bond. There it is. There it is. All right, so we have taken out this low volume area, or this volume edge, I should say. It's a small low volume area, nice little edge. They've been stalling there for quite a while. They finally busted through it in the overnight. They started late in the day yesterday. They traded up above that 115, 8 to 10. They held above it overnight, reverse retested that level, and they're off to the races. They're heading higher. So we're now heading up towards that 116.22s, almost up to the 17.16s. And these are the two attractors on the upside I'm eyeing. So trading bonds on the long side right now to get started. Let's see how far they can take it. You see the attractor up here at 117. That's a short-term mode. And let's see how far they can take it. We're looking to buy against 115 26s, 20s, 115 16s. The last one to buy against is the 115 10s. If the 115 10s comes out, go back range, but we are back in that lower range again if that happens. So they're going to buy against these support areas, 26s, 20s, 16s down to the 115 10s for rotations back up. Not going to be very aggressive on the short side, though there could be shorts up here when you get a little bit closer to the 1624 up to the 117s. I would be more aggressive. You can see how the volume starts picking up here. That would be a better resistance area. So we got a ways to go on the bond, so you can certainly take this higher. So we'll see how that shakes out. But trade bonds on the long side to get started. On the NASDAQ, that's the one which has really made a big dent, right? They're really taking this higher. After they took out the 260 to 300s, straight shot up here to the 22,900s, almost 23,000 now. And but they're a pretty good move to the upside. Big tech are definitely doing well. It feels kind of broad though, the rally, but it's still lighter volume. Volume is backing off a bit in the overall picture. So looking to buy weakness, watching these lower edges, I would say this volume edge down here at the 22,700 is still the one I'm eyeing. We're still extending to the upside, so still in stage one on this profile. And we'll see if they can't extend today. Maybe we'll start we cut off the buying for now. But at this point, the little bit of weakness in the overnight, not much. We're still holding the low of yesterday, so I would start looking to buy weakness initially against, and now it's going to be I was going to say 820, but we're already taking that out. So 780s, 740s, 690s to 700s, down to that 660s rotations back up. They're giving it a little bit more room today. See how weak it gets. But the 690 to 700s and the 660s, if both those support areas comes out, back range bound at that point. Below the 580s, going to start worrying about the short side and potentially retracement trade at that point. It could also be, as both on the ES and NASDAQ, as you get early weakness, especially early on, if they start running this lower fairly hard, you can certainly see them see opportunities on the short side of this. You just have to be really nimble on those because it happens pretty violently. And you get a half hour of hardcore selling, and they ask and they take it lower, and it does give you a lot of opportunities to get short on that. So it is difficult, but there's probably a few short opportunities on the way down here if you get early weakness. Just to make sure you don't sell into support. In other words, you get right into that 740 area, don't sell into it. That's going to just may find you right in a shitty spot. So avoid selling into support areas. Otherwise, you potentially could try a short trade on the way down if you get some good early weakness. Below that 690 to 700s and the 660s on both those support areas comes out, we are back range bound. If they run back down and one of them holds, they're probably still going to stay on the long side. Then finally, below that 590, 600, yeah, at that point, we may turn to the short side and see how far they can take it. So if they get down below the 600s, they're taking out that little area right there. We are back down halfway down here, taking out these single prints. If those comes out, I think they can keep retracing. So we have a couple of single prints here at the 700s and the 600s. And then both of them comes out, I think they can retrace more. So, and as we keep saying, this is a reasonably light volume rally. It's not a whole lot of volume on it. Hang on, sorry about that. It's not a whole lot of volume in it. It is enough, but it's not a crazy amount of volume in the breakout. Now, on the way up, looking for short setups against the 860s and the 920s. Rotations back down. With a lot of cautions, we are still in stage one. We're still extending to the upside, and I would just be less aggressive on those shorts. Still could be short setups there as they run up if it becomes more volatile there. A more volatile range-bound day. Just go in and look for short setups. Like yesterday was a one of those days, a holding day. Buying weakness would have worked for half of the day, right? But you could also have, after you start realizing it's pretty range bound, try the short side on the upper end of the range as well. You only had one time late in the session when they actually did run it higher, and that would have caught you at least once if you were trying to fade those edges. That's why we always say in a stage one scenario, don't be super aggressive on the short side. Look for a decent setup and a trigger. If you get ideal level setups, yeah, take them. I mean, it is the correct setup to take. If it doesn't work and you have a tight stop, you get out of it quickly. All right, so ES and NASDAQ from the long side, bonds from the long side of the market. Let's see the oil and gold. And gold is making a big move. So that's kind of surprising. Wonder what's happening, if anything is happening. So gold, capital flow. Remember that we were down here in this support area, volume area. We were looking at them taking it lower, and it almost got down here to the attract at 32.30. They probed pretty good to the downside in this low volume area, but it held and they retraced. And now they did take out this resistance area I talked about this morning, or talked about last night, going in the wrap up. The 33.10s start taking that out, and it happened pretty early, and then the overnight has run right up here to the attractor and then some, right up to reverse retest this area. So 33.60s, they are on fire, heading higher. So they're right up here in this upper range. It looks like they may be heading up to the 3400s, but That always gives me concern. You know, when the gold turns like that and start rallying, it's not the reverse retest. It didn't stop at the attractor. It keeps going, and that just gets you concerned. So always concerned about that. We'll see if something is in the works somewhere. Um, but gold definitely took out these upper areas of resistance. Let's see if they keep this going. This one right here, 33.65, would be the last one to get short against for rotations back down. Above that, just look for a rotation up to the 3400s at that point. So, or an extension up there to this upper area. So, gold definitely getting me a little bit concerned. A little red flag showing up there. So, I'm not sure why gold is trading higher like that. Or it could be a start of profit taking and rolling money from equities into it's more of a safe asset, but yeah, could I potentially explain the little rally on bonds as well? People rotating out of stocks into gold and bonds, but you know, it's that would imply that we may see some selling today. It will see how it shakes out. But at this point, it's definitely starting on the long side on gold. Trade it on the long side. Let's see how far they can take it. Right now, we just opened the gold market 820. Uh, let's see if they can keep this going. Now, gold, it could also be that we see a hard retracement on gold here at the open, right after the open. That would happen fairly quickly if it happens. And if they keep going, then just stay on the long side of it. But if they, for some reason, and we've seen that sometimes when the overnight overextends to go on gold, you can see it retrace pretty hard. So if that's what this is, and it's really overextending itself a bit, we probably see them fail here and retrace back here to that 3340s. So if that starts happening, I would be pretty aggressive on the short side here when they take out the 3360s and starts retracing, because you're not going to get much opportunities. Could be a pretty violent move to the downside. So watch for that. So those two things are things I can see happening. They keep extending, in which case there's something driving it, and you have to be a little bit worried about the overall market. Or they start retracing this and retracing some of this overnight down to that 3340s. And you'll see them watch for that 3360 area if that comes out. They start and then uh, they'll basically take out that 64 level and then that mode here and the low of the day session start here. So that whole thing comes out here. Watch out below. All right, so that's gold. We're starting off on the long side. Let's see if they can going to extend, or we're going to see a retracement dynamic kick in here. But that dynamic is very tradable, but it's kind of violent, so you have to be aggressive on that to get on it. On oil, pretty much holding in the range. Oil kind of died off a little bit. Not going to be paying too much attention to it. After this risk off kind of dynamic, they are sitting here around 65. Stubbornly holding that low volume area at the 64. So at this point, I'm just staying range bound. Looking to sell strength up to the 66.30s. Looking to buy weakness down to the 64.60s, maybe the 64s. And that's about it. So fairly straightforward trading on oil. So looking for short against the 65.70s, 66s, 66.40s for rotations back down. Looking to buy against support, 65.20s, 64.60s down to that 64s for rotations back up. So below 64, look out below. Above the 66.30s, maybe we have another thing going on and we seem to see them start heading higher. Now, the Iranians are not playing ball at all. I mean, you saw they out there declaring their fatwas and not cooperating, and they're right back to where they were. I guess they didn't learn anything. So, and we'll see how that shakes out. At least they don't have nuclear weapons anymore, so that's a good thing. We'll watch gold. Let's see. I think that's gonna be an interesting one to watch to see where they're gonna go here this morning. It could be a good sign of it. Right now, both the ES and NASDAQ is showing some weakness, so. We'll see how this whole thing comes together. All right, back to the ES, and there you go, a little bit of weakness kicking in early on. So we'll see how this whole thing start developing. Alrighty, guys, we got a starting point. ES and NASDAQ on the long side. Watch out, watch below that 62.10. Take off the long bias from there, and on the NASDAQ, that level will be down here at that 660 to 660 level on the NASDAQ. All right, let's see how this first day of the third quarter comes together. So good trading, guys. And we are in that short July 4th week. Just to check the volume before I wrap it. I mean, you see we have the ES volume is at 120,000. The micro is at 116. Yeah, so it's kind of normal volume, normal volatility for now. I would expect it to start drying up pretty good here, getting closer to July 3rd. All right, guys, good trading. I'll see you back at 11:30 for the next update.